What is good, friends and neighbors? This Atlas Trading, hope are doing well. As you can see, this is a new video on the My Brain series, and I talked to some people. I um, synced back when I was starting off, and I wrote down some questions that I had that I asked people when I was new. So my mindset today is basically as a new trader, you have um, finished the videos. You have now, let's say, YouTube 2022 model. You have finished that, and you know what a fair value gap is, breaker is, and so on and so forth. But you are kind of um, just overwhelming with the whole situation, and you open the chart, like it's just everything. Just it's just too much information put right on your face, and you're like you don't know where to start, where you should do. And that's the frame of today's video. So um, right now your stage is like you have now the pieces, but you don't know how to puzzle them together. And I will definitely say that um, you should watch the first episode if you haven't watched that, and I will just repeat one more time here that you need to the analysis should always be top down, and that's very important because the very important thing that you to have in mind is that higher the time frame is, stronger is the draw. So when I was coming up, my biggest issue was like I skipped the whole top down process and I just jumped into a 1 minute chart, 5 minute chart, whatever, and just just, just without the higher time frame context, just started trying to like do shit. And then I was like, I don't know what's going on. I thought I had it right, but it didn't work out, and um, that's not even uh, the, 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 the problem of like what entry I had or whatever. Often it's you are on the run direction of the market. So basically, let's say, let's take, let me go to a lower time frame. Or let's say this, okay? Let's say, let me go to the 1 minute. Let's say, oh, you know what, let's keep it on fire. Let's say I saw this and then I saw, okay, we have, um, let's just say I want to keep on buying. I think the price will go higher. Then I entered um, on, let's say, um, this, let's say it's an older block. And then you see it trades up a little bit. I was in profit a little bit. Then it traded against me, and then I got stopped out here at the low of the order block. And then I will still have the same idea. Then I traded this order block because I think the price should go higher. And then again, I got stop loss. I got stop out again. Then the price comes down here, take out the liquidity, and then I'll say, okay, maybe it's a turtle soup or whatever. But no matter how many entry I take here, or on what block or whatever I entered on, at the end I will all get stopped out. Why? Um, then I will wonder like what's going on? Why does it not work? Why? Um, I remember asking this specific question to another friend. I asked, why does this fair value gap work and this one not? And at the time, and he was also learning ICT's concept as well. He was like maybe half a year ahead of me, but at the time, he was also not able to answer this question for me. But after time, now looking back on it, I realized that is basically the question that we all need to solve as a trader. So this is what trading is. Trading is figuring out, or I see trading an ICT concept or becoming a profitable trader with ICT concept is not knowing what's this a fair value gap, this a order block or whatever. It's knowing which one is the right one, which fair value gap will work, which order block will work, and so on and so forth. So, um, I can't answer that question directly because, as I said, my biggest mistake. So the whole thing was basically wrong from the very beginning. From the first step on, I was wrong. Why? Because we always say top down analysis, and it's called top down analysis for a reason because you have to go from higher time frame to lower time frame, and so that the trade idea will work or whatever. And I just I skipped the whole process. I had no higher time frame. Um, what's the word? Higher time frame view or bias or draw or whatever you call it. There's a huge lack of higher time frame view when I was trading. I just oh this is a bullish price run and this is a black candle, boom, that's the order block. I will enter on that. I had no idea what the higher time frame was doing and like in general what's going on with the market, and that's why I had the question that I said before, and so the price, as the price is coming up, the whole time I will keep on buying and buying and buying, but at the end, no matter how many enter I had, or what I entered on, I will all get stopped out because I was standing against the higher time frame order flow. So um, the solution is knowing the higher time frame because it's not a, if you have no higher time frame, um, oh, it's so complicated. Like the reason why it did not work is because it's against the higher time frame. Basically, like if I have to explain it in one sentence, it's because of that. I try to long here, try to long here, try to long here, but it's against the higher time frame order flow. The higher time frame, the market is going to some, it's going in general against me, but I was holding a bullish idea here. Higher time frame, and you definitely should start from a higher time frame to a lower time frame. Top down analysis, and the first thing first you should do is not trying to um, pick a fair value gap or pick order block and enter in that. No, the first thing first you should do, I said it in the last video as well, is that you need to have a bias. Bias means like in the long term, you think the price will go up or go down. That's bias. Okay, and then you have a draw on liquidity. Bias is like in general the general direction. Okay, and bias is like what's your next target, what's price going next. Even though you can have overall a higher a bullish bias, but still it don't mean that the market and will be going up every day, that the market is will going up every session. That don't mean every candle is gonna be a green candle. But does that mean the um, bullish bias is wrong? No, you just don't know what the market is doing right now. The market, um, the even though the bullish idea, the bullish bias is right, the market still need to, let's say, go down to grab a sales liquidity before expansion or reprice or whatever. As I said in the last video, liquidity is king. Everything is based on liquidity. The whole market is based on liquidity. It's either building liquidity or seeking liquidity. As simple as that. That is what the market is doing 24/7, non-stop. Liquidity is everything. Okay? Have that in mind. Everything is based on liquidity. And it's the same on a 5 second chart or a 5 months chart. It's the same. Everything is based on liquidity. Everything is liquidity driven. Every model you see out there, um, when you go to YouTube, there's all these people do with this model I passed my funded challenge or this and that. This model made me this that much money. I don't want to go into that if this model is good or not or whatever, but you can watch those videos, but then you'll realize everything starts with liquidity. No one's gonna tell you, oh, this, that, and I just see this candle and then boom, I enter. No, everything starts with a liquidity grab. Okay, the market is driven by liquidity, and there's three questions that you need to always able to answer as a trader. Number one, where is the price coming from? Number two, where where is the price right now? Number three, where is the price going? And what does that mean? Where is the price coming from? And let's say, yeah, and you have a model, let's say, even today, I saw, I can't remember where it was, but for example, let's say everything fits your model, yeah, and then the price, um, you have your limit order set and everything, the price start to retrace, and then even though everything fit your model, you still get stopped out. Why? and I had the trade, I think somewhere here. Oh, I think I saw it on the 3 minute time frame. Yes, yes, here, boom, 3 minute time frame here. I was thinking like, okay, we have all this um, sales and liquidity here, and we have SMT here. So this low, you see, this low, we run that on ES, but we did not on NQ. Okay, now we should go higher. Then I was looking for entry. You know how I trade my breakaway gap and measuring gap. I didn't had it here. Um, this one, the first one is smaller than the second one. That's why I didn't trade that, even though it worked out. But I don't care because um, it's not my model. Okay, I need to stay disciplined because if you are not disciplined, your model don't exist. And if your model don't exist, the whole win rate, the whole statistic and the percentage and the whole numbers don't work if you are not disciplined. Okay, if you're not disciplined, it's basically you don't have a strategy. You just go in there and you can, I don't know, flip a coin and buy and sell whatever, or just basically gambling. Okay, now we have a breakaway gap and measuring gap. Okay, but I still didn't trade this. And you can also see, even though if I had traded this, my entry would be at the high of the measuring gap, and my stop loss will be at the low of the breakaway gap. And now I would get stopped out. I didn't take this trade. Why? Because as you can see, everything check the boxes here, but as I said, there's three questions. I should probably write it down somewhere. Let me use the 1 hour chart for it. Where from? Wait. Where from? Where now? Where to? Yeah, let's just keep it like that. And I will have it here in big. Boom. So now I didn't take the trade. Why? Because I was asking myself, where is this coming from? And I don't mean the sell side liquidity, even though we had this SMT here, but that's for this um, price run. But the question I was asking myself is, where is this retracement coming from? Okay, but if you are asking yourself this question, you will not take this trade. No matter if you trade my model or whatever model is, well, you will not take the trade. You will definitely not take a buy. That's what I'm saying. Why? Where is, because you will just simply ask yourself, where is this price coming from? Where is the price retracing at? And now, as I said, this run up is coming from the sell side liquidity. Okay, the SMT here that we have. But then seeing the price start to form a top and retrace. Where is the top at? Where is this retracement coming from? Is now I'm asking. You might pause the video, look at it. I have 4 charts here. It's gonna provide more than enough information you need. You will look at, you can pause the video. You know what? Pause the video right now, look at it, and try to answer the question. Okay. And why I didn't take the trade? Because where from is the retracement? It's coming from 50% level of this 15-minute inversion fair value gap. Yes, we also take out that liquidity. The highest high that we had in the regular trading hour, but that's not the biggest point, because if your higher time frame bias and your higher time frame drawn liquidity is like me here, all this equal high, it should not reverse directly after this liquidity. But the question was, the problem was, the price traded up and stopped at 50% level of this 15-minute inversion fair value gap. Let's go to the 1 minute, and you can see the body are respecting it. You see where the body stopped. Okay, the the candles are respecting the 50% of the inversion fair value gap, and then from there it start to retrace, and that's why I did not take the trade, because if if my bias and my draw is correct and the price will keep on going higher, it should disrespect what's standing against it. It should not respect this inversion value gap. But the problem was it respected it, and from there on it started to retrace. And that is why I did not take the trade, because we was respecting this inverted fair value gap, and this inverted fair value gap is a idea. It's providing us a bearish idea. So if we respect it, means the price will probably go lower but not higher. You see, and also I can draw you here this inversion fair value gap on a 1 minute. Then you can see, let me delete this real quick, that the price respected the 50% level of the 15-minute inverted fair value gap, and then started to retrace, right? And then we had all this sell side liquidity here resting, but the price traded up one more time, and here we're gonna trap a lot of traders here. Let's think, oh, we have all this accumulation, we are building liquidity, and boom, you see, I don't know, trend line or whatever. Yes, the price started to move with displacement. Now, if you don't have everything what I just said, and you only have this 1 minute chart, you'll see, oh, the price boom starts to run. Um, with displacement, and we have fair value gap. Oh yeah, you know what? Um, I look left, and this is gonna probably be a breaker or whatever. And let me just entry on this fair value gap, this BC. Then you will get stopped out. Why? Because where is the price coming from? This retracement, where is it coming from? First of all, you don't have any reason to justify this buy. You don't have a sell side liquidity grab before the buy. Okay, that is uh, that is a mistake, and I will probably take this trade. But you know what? I'm gonna just do my video. But more importantly is, always ask yourself, can I justify the price run that we just had? That let's say I'm bullish. Can I justify this price running up? Can I justify it? Yes. Okay, cool. Does it check all the boxes to my model? Okay, cool. But still, before your entry, it's very important you ask yourself, now the price is retracing, and before you set the limit order, you need to ask yourself, where has the price stopped? Where had we set So you're expecting something like this, yeah? And that's how we want to trade. We don't um, chase the price. So we don't buy as the price is going up. We are buying as the price is retracing. That's what we do. That's what we do as ICT traders. Okay, we buy when the price goes down, but then you need to realize when this top was set and this price is running down, it's retracing. There's two options. Either you're right and the price just retrace down to the previous price like here, so this leg, and reprice it to, I don't know, fair value gap, break, or the blah 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 blah, and then keep on going higher. That's option one. And option two is the price is gonna turn now. Okay, this is not a, a retrace, but a reverse. Okay, and how do you know that? You know that by, first of all, not only you can justify this price run, but also you need to justify this retrace. What what is the price doing? That is, the price is always talking to you, but the only issue is that you don't understand it. Okay, it's like learning a language. The language is always the same, and it might has told you something uh, all the time, but the only issue was you didn't understand the language that well at that point to understand it. But now you understand, you are saying, ah, okay, it makes sense now. That has been there all the time, telling me the same stuff that I'm wrong. But I was just simply not um, knowledge enough to understand what it's trying to tell me. Let me take a sip of water. Okay, water is always good, guys. Drink water. You need water. And also don't drink tap water. That shit is poison. Okay, now let's keep going. Now, before you enter your limit order, you need to justify this retracement. You need to know why this is a retracement for it to go higher but not a reverse. You need to imagine out there, let's say there's two traders seeing the same price action. One guy is gonna think, okay, we run the liquidity, now we reverse. And another guy is saying, okay, we trades up and this is a market structure shift. And we are retracing to reprice and go on, keep on going higher. At the end, one guy will be right and one guy will be wrong. Why? Even though it's the same price action. Because one guy won't be able to answer this question. Why is this a retracement but not a reverse? Or why should this be a reverse but not a retracement? Let's take this as example. Yeah, you'll see the price has accumulated here all the time, and then boom, suddenly you see this, let's call breakout, right? You try to um, and you're bullish, you try to catch the price, catch the run or whatever. Then you enter, you say, oh, fair value gap, enter on it, but you can stop out. Why? Because where does this stop? So this price run, where does it stop? Where is this coming from? Where is this top at? We only traded up into the invergent fair value gap. You see? We chopped around here, kind of, grind it lower, and then boom, suddenly this pump. But where does this pump stop? At the inside of this inversion pivot. Okay, we're looking at the 1 minute chart, and you see how the candle traded into it and stopped here, and you see how the body of the candle is respecting it. The body closed inside this inversion pivot. Okay, you see the body closed inside this inversion pivot. Okay, and that is telling you that this is a trade you probably don't want to take if you're bullish, because it stopped at somewhere that it should not stop. If, let's say, um, you're bullish and you're trying to entry somewhere, first of all you would like to see a sort of liquidity grab of all the sell side liquidity that are resting here, and after that you would like to see the price, and because here there's no significant swing high or low. We're basically just accumulating range in here. You need to see a clear market structure shift, uh, and then the price retrace to uh, somewhere in the previous price, like that makes sense. So you would like to see the price trade ideally above this high, and then start to come down again to somewhere that's reasonable, and so on and so forth. The issue here was that the price stopped at somewhere it should not stop. If the price is respecting this inverting fair value gap, you're having some issues. The next candle, yes, this candle stopped here inside the inverted value gap, but the next one might break through. You never know. But the issue is like, even though it did, it is still not ideal that this happens, because ideally, if your idea is right, everything that is speaking against it for the opposite direction, ideally you don't want to see that get respected. That means um, if there's a fair value gap, we should not respect it. We should disrespect the fair value gap. Um, let me give you an example. Here is when we respect a fair value gap. We're respecting this CP, and we trade it into that, and we start keep on dropping. And this is where we disrespect a fair value gap. You see how we close it in with all just one candle, and the next one keep on going lower and close below it. We disrespect this BC, and that's something you don't want to see if you are bullish here, because it's speaking against you, and ideally this should not happen. Ideally, the everything that is speaking for a bearish idea. So when you are buying, as the price is going up, you're in a buy. You want to see a CB get disrespected, a bearish order block gets respected, a bearish breaker, so on and so forth. You want to see it get respected, and if it's respecting it, it's either way not good. Either it could be an, I call it like a small speed bump. So let's say here, run up the last close candle order block, and you see how until this point So where my mouse is at right now, if you look left until this point, the price is uh, still respecting the bullish order block. It comes up, it comes down, respecting this bullish order block, and had this small reaction and then kept on dropping. That's what I call a speed bump. That could happen, but ideally, it's gonna be there, but ideally, it should not. Like in the perfect trade, it should not be there. It should just boom drops like this, okay, or trades up like this. Disrespect everything. Like that's the perfect trade that you want to have. Yes. And is there anything more? Um, how long have I been talking? Yes. So then you have just keep these three questions in mind always, and you need to able to answer that before you take a trade. And let's say, or let's talk about why this price action is bad and why you should not trade. Personally, I'm not trading it, and I'm not saying as long as the price is moving, the market is moving, someone out there is making money, okay? But I am not trading this market simply because um, I don't want to spend my mental capital and also my equity on all this. Is just, in my opinion, not worth it. Not only like for me at this point, not even for my equity. Like my mental capital is worth more than my equity, but equity is also very important. If let's say, um, did I talk about it in the previous video? I think in some video I talked about this. I said trading in the market is like it's like life. Your number one goal, um, it's not to be successful, whatever. Your number one goal is always to survive, because only if you survive, you can do the other stuff. And if you die, everything's over, right? And I also talk about um, video games. I said um, I, I talk about the video game referring to you should not quit, because I said in a video game you can lose, and even though you lose, even though the game says game over or whatever, you can still start over. Your PlayStation didn't explode. Like even though it says game over, but the game is not really over. You can always start again, you know, and you get better and better and blah blah, and next thing you know, and you won. But uh, you only lose when your PlayStation explode, and I have never seen that before. Or you quit. If you quit, you will never win. And that was referring to not to quit. And what I'm trying to say here is you need to, like, either you quit, okay, either you quit, you say, you know what, fuck this, I'm not built for this is too hard for me, or whatever reason, you stop doing it, okay? That's number one. Number two is you can't trade no more. So you blow your account, you have no money left. That is also, let's say, quit, because you can't engage the market no more if you have no money in your account. If you have, even though you have now the perfect um, setup in front of you, let's say fucking uh, everyone, the Saudis or whatever, everyone, the whole world has trained um, bricks now, and from today to tomorrow, they announce the news and say, "Fuck dollar. Everything we do now, we're gonna do in. We created a new currency. It's gold based, and so on. And let's just fuck the dollar." And now everyone is going crazy. The market is tanking. Like, I don't know, it has gravity on it or whatever. Everyone is shorting it. It's basically free money. Everyone is shorting dollar. But even though we see that, you can't trade, you can't make money on that if you have no if you have blow your account, you have no money in your account, you can't do anything. If you have no money, you can't trade. So try. You need to always um, have this idea in your head that you need to protect your capital, because that's basically like your life um, in this game. Okay, obviously you can blow your account and deposit new money on that and buy a new account or whatever, but like that's not what we want. We want to be consistent, and this is trading, not gambling. Okay, you don't want to be a one-hit wonder and just you know um, do some bullshit, crazy over risking, and boom, you take one trade, and now you take a fucking 10K profit, and you withdraw that, and you think now you made it, and next thing you know is that the market will humble you. Okay, you don't want to be a one-hit wonder. You want to be consistent, and you don't want to have you don't want to have 100K months, but nothing for the rest of the year. You want to be consistent. You want to have a 10K month, but therefore you make that every month. You want to be consistent. It's a skill. It's not luck. Okay. Um. Wait, I got distracted again. Oh, I was talking about why the market was shit. Why this market is shit, and I am not trading it, because as you can obviously see, the price is not moving clearly to a direction. We are basically just going up and down, up and down. Why? Um, okay, I'm not gonna even talk about the fundamentals, but let's just talk about some simple stuff that you can see here. The price traded up, start to reverse, but now still answer these three questions. Where is coming from? Where is the retracement coming from? Where does the price stop? Where does it form the tops? It's respecting the new week opening gap, as you can see here. I mark it out, this two black line here, low and the high. It's respecting the new week opening gap. And when that happens, you like, I'm not saying it's not possible um, that it will break through or whatever, but like in general, you don't want to see that if you are planning on taking a buy. Okay, and then you can also see it indeed reversed because it was respecting that, and then it comes up again, and let's just say you are engaging the market with the idea that the price will go up. Okay, I have my draw here, you have your bias, whatever. You see that you want to buy, okay, an order block, proportion block, inverted, boom, I enter here, but then you see the price respecting it. Then you see, then boom, it start to reverse. And then you are like, okay, I got stopped out here, but you know what? Now we have this rundown, and it starts to reverse again. Balance price, which I enter here, it goes up. I'm in profit, but boom, it dropped again. Why? Because you are not answering, you are not asking yourself these three questions, and you cannot answer them. If you ask yourself these three questions, you will then realize you can answer them, and then you will not take the trade. What I'm saying is, if you're taking a buy and you see the price, let's say you entered here already, okay, on this invergent fair value gap or on this proportion block, you entered here already, you're now in profit. What should you do after you see this? I will, personally for me, I will definitely trail my stop loss to break even. Always remember to trail stop loss. I'm not saying to do it like very aggressively, because sometimes I do that and I got stopped out very quick because I trailed it too aggressively and miss out the, let's say, the trend or whatever. Okay, but if you can, or if you are seeing stuff like this, as I said, if you are taking a buy, you want to see everything that will speak for a sell idea gets disrespected. And now you see the price trades up, even though you're in profit, but you see the price is respecting it. The body are closing inside of the new wick opening gap. Now I will definitely trail my stop loss to break even, because let's say there's two guys, they both take the same trade, same entry, same stop loss. One guy is me, I trailed my stop loss to break even, the price comes down, no biggie, I got stopped out, I break even, I didn't lose any money. But one guy had this do or die mindset, and he was like, you know what, I just place my um, all my orders, my entry limit, my stop loss limit, my take profit limit, it's either TP or SL. I'm not gonna touch it. I'm gonna just set it and walk away. Okay? And this guy will eat a full stop loss here. You see the difference? I am not taking an L here, but he did. And if you always do that, because markets sometimes are just not that good, and it's gonna put you in profit for a little bit and then collapse again. Okay, and imagine one guy keep on trailing his stop loss to break even. His week is gonna be break even. Okay, and imagine this other guy, he did not trail his stop loss and go in there with this do or die mindset, and every time he will take a full stop loss. Let's say they both have 3 trades a week. I am closing the week break even. I'm not losing money. The other guy are down. Let's say you take 1%, you risk 1% per trade. The other guy is down 3%, and that is only for 1 week. And imagine what the difference is gonna be in the long run. Okay, you always want to try your stop loss to break even as soon as you can, and just it's hard to explain because what I'm saying here is right, but I know for a fact someone will be watching this and like how do I say it in English? Like not misunderstand, but like abuse it. Okay, like all the prices move 10 points in my direction, boom, let me throw the stop loss, and the next thing you know, he was like, oh, I listened to this guy. He told me to throw my stop loss. I throwed my stop loss like a dickhead, and then the next thing you know, on every trade after 10 seconds, I got stop loss. You know, like the idea is right, even though, but sometimes some people are just abusing it. Okay, and and then boom, it comes down again, but it starts reverse. You see, oh, it cleared out this sell side liquidity and start to reverse. With displacement, we have this balanced price range. Oh, let me enter on that. Okay, let's say you entered. Let's say you entered here. You stop loss at the low. Take profit doesn't matter. It's over here, okay? And then boom, you see now you're in profit. But if I see this, I will throw my stop loss to break even again. Why? Because it's respecting this CB. You see that how the bodies are closing inside of it. You don't want to see that when you're bullish. You want to see it get respected. Let's say, uh, let's say here you have this CB. It should speak against it, but it disrespected it directly with one candle. Boom! It traded above it. That's what you want to see. Okay, and then uh, boom, the price comes down again. You eat the full stop loss. Now, but you want to keep longing, right? uh, you'll say, ah, here it's a high probability order block because it's lining up with the fair value gap. You know what? Let me enter on that. You enter here, and it's going up, it's going up, it's going up. If you are smart enough, you will take profit maybe here or here. If you do that, congratulations, it's a winning trade. But if you don't do that, and you see how the price are just not really showing willingness to continue higher, and you hold on to a position, and you don't ask yourself, okay, where is the price doing right now? At what stage are we in? Are we keep on going higher? Is the price just retracing, or is it gonna reverse? In this case, as we talk about here, the price is reversing. Okay, this is not a retrace, this is a reverse, because we only go up to reprice this inversion fair value gap again. Okay, like um, you know what? Let me just call it here today because I have this feeling that I'm just repeating the same stuff over and over again. But just keep in mind these questions. Or let me just give you a last example. Yeah, right here, I have no idea what the price is gonna do, but I'm gonna say it's gonna keep on dropping. I might be wrong, but let me just give you this idea of I'm gonna let's say entry here, and let me just go through the process with you. Let me take a sip. Wait. Uh, water good. Okay. Let's just say I'm bearish and I want to take this shot. Now I will be tagged in. Okay. Now I'm inside this trade. But before I do that, same three question. Where is the price from? So the price dropped here. Why did it drop? Because I would say we took out this equal high buy side liquidity and traded up into this traded up into this 1 minute mitigation block. From there we started to drop. Okay, that's question number one answered. Also we have this higher time frame. It's also higher time frame. 5 minute CB here and here. Okay, then now you ask yourself the question number two. Where is the price right now? Okay, we found here. We take out the liquidity, and using the liquidity, the price started to drop. We drop down here, have a market structure shift, take out this low, and this low, and also this low. So these three are like relative equal low. Okay, and then now the price is going up again. This is what I'm saying as where is the price right now? It's going up, but um, okay, try to explain why it's going up. Because we have a fair value gap here, because we have a breaker slash order block here, and 5 minute or 3 minute, whatever, order block, and let me just mark it out here. Boom, here. Okay, now let's see, is the price respecting the bearish idea? Yes, it is. Why? You can see the price traded basically only to the body of the lower end body of the order block and stop there and are trading lower now. Also, the price is respecting this fair value gap. So that is good. That is what's speaking um, along our idea. Okay, and now what you have is, let's say you try to speak against yourself. Now you see the price comes down again, are stopped and respecting this bullish order block. That is something you don't want to see, and I don't know what's going on right now, and to be honest, I don't think it's gonna work. But let's just say you are taking this trade, okay? I'm not saying it cannot run here higher and then keep on dropping, but this is just something that you don't want to see. Like ideally in the perfect trade, it should not happen. It should disrespect it. And you know what? Let's um, just watch this trade live. Let's do some tape reading. I have never done that with y'all. Let's just today do some tape reading and see what happens. You know what? Let me put on paper trading, okay? And let me wait. What? NQM. This is NQU right now. What's going on? This is a this is a trade from last contract. What's going on right now? Let me close it. I can't even close it because the last contract has expired. I can't even trade that no more. What's going on? How can I close it? And bro, I have never had this before. You know what? Let's just refresh the account. 50k is good. What? Okay. What's the name? Name is one. Boom, we have a new account now. Now let's say we take the trade. I am not, you know what, let me just buy more, sell more, because then I can show you where I would take partials and so on. Let me sell 4 more, so then we'll have 5 contracts. Okay, now I have 5. My stop loss, let's set it here. As again, this is not, it's definitely not a trade that I would take, but I am just showing you guys this as an example and telling you what's good or what's bad, what do you want to see, what you don't want to see. Right now it's not looking good. Why? Because even though here, bruh, let me just take a screenshot because otherwise, where's my drawing? What? Man, where's my drawing? Ah, here. Sorry. Here. Otherwise, the chart is keep on moving and it's pissing me off. Boom, like this. No, not safe. Okay. Why? Why is it not looking good right now? Even though we have this NCB that we are respecting here, yeah, even though we have that, it's still not good right now. Why? Because we are respecting this order block, and you don't want to see that. Ideally, you want to see it disrespected, and let's say it disrespected, yeah, the price comes down. Oh, let me just show you the candle. Fucking hell. Let me cover all this, okay? Let me draw. Brother, can I hold control and the line will be, oh, perfect, I'm so smart. And we'll make this one big candle, okay? Let's say this is your candle right now. This is something that you want to see. Why? Because if we close below, then what does this green candle become? Let me use another color. Let me use white. What does this green candle become? It becomes a proportion block. Why? Because here this run up that take out this buy sell liquidity, we traded traded lower, closed lower, and now it becomes a bearish a bearish order block, and this candle traded into that again, right? And the next candle will trade lower again. So this green candle that traded into the previous order block will now be a proportion block, because we then closed below it again. Right now, then it will be looking good. Why? Then the market structure continues, and then you would want to see this proportion block gets respected. Then if it's like this, everything will um, speak with like among you, with you. Okay, then it's not speaking against you. Right now, this bullish order block is speaking against our sell. You can see here. See, and then now you see the price traded higher. You see now here we have this order block, right? And then here the price traded higher than this two black candle again. And what does it like? it makes this as a proportion block. So it's really not good looking good. Also this one, okay, it's making new bullish order block and proportion block that are speaking against us. That is something you don't want to see. But does it mean I'm gonna close the trade right here, right now? No. Why? Because it could go still a little bit higher to tap in that 5 minute order block or breaker or whatever you call that. Okay, right now let's just keep on watching. And let me make this chart more clear. Oh, this one I will keep. Wait, what is this? Oh, okay, this one, let me delete it as well. And this one I will move it to the 5 minute. And then let's do some chart high G here. Okay, so that it's not that messed up. In general, I am not gonna take the trade, never in the world, because I'm bullish and it's also not looking good. Why I'm bullish? Because we have this equal high. And let me show you a daily chart. High. Why I bullish? Because last week in the weekly review I said I see the price keep on going lower and my target will be first of all this kind of low. So here, why? Because it's the previous week low, time-based liquidity, right? And then the second one will be this two equal low, right? Very reasonable target because the equal low is sell side liquidity. And then I said my third target will be this low. Why? Because you can see it's a very strange swing low, and that is an intermediate low. That means you have a higher low on the left side and also on the right side. You can see it here, but if you go down to a lower time frame than that, you can we will be able to wait, where was it? Bruh. I think it's this one. I think. See, higher low here and here, whatever. It's an intermediate low, and I said I would want to see this one get reached as well. Why? Because if we take out the intermediate low, that is like this low is like the last defend line for the bullish idea. And if we break through that, it's probably that the price will keep on dropping and NQ just set a top here. But it did not happen. So what does that mean? Same question that I ask myself: where is the price coming from? Where is it now? And where to? I was expecting to take out this low, right? But it stopped here and start to reverse, start to trace up higher, let's say, okay? Now you ask yourself, where is this going, where is this push coming from? Is this a reverse or is this a retrace? Okay? And I am saying it's a reverse. Why? Because you see this equal low here, right? How much is that? It's less than 40 points. In my opinion, that is way not enough for this type of liquidity pool. And not only that, if now I put this is not Fibonacci, but it works the same. So this shows you the 50% level. You can see the price are respecting the 50% level of this week. That is that is something that will speak for the bullish idea. That is something you don't want to see when you are bearish. Okay, and then I look at the daily time frame again. I said, you know what? We we traded into this body indeed closed inside of this daily BC, but the point is we traded into the BC um, so little that I will say we're gonna disrespect um, it. But you see the next candle we traded up away from it. So that is showing us that we are respecting this daily BC. So the price should go this align this BC along this BC is telling us right now that the price want to trade higher. And does that make sense? Does it want to trade higher? Yes, because why? We take out this liquidity. Why is this not a retrace, let's say, to this invergent fair value gap or um, I don't know, this order block or fair value gap or whatever. Why? Because first of all, the run on liquidity was not deep enough, and and uh, we did not take out the intermediate low, which is around 50% level of the daily fair value gap. Like that is showing how weak this sell was. It didn't even reach the 50% level. So um, the what does uh, this make us then? This then makes institutional order flow entry too. That means we're so weak we can't even the sell is so weak we can't even reach the 50% level. But now, why is today um, or this week in general not that good? Because right now, as for right now, we're stuck in between. So this busy, this is like, you know, I know it's kind of complicated and you can feel like I'm talking against myself, but that is the mindset that you need to have. And maybe that is even though that is even uh, the mental edge of mine, because in my head I'm speaking everything out right now. Just so you know what's going on in my brain. I'm making my brain see through for you. Okay, this is always going on in my brain. Like not only trading, me as a person, I'm just like that. Like, you know, I have this two voice in my head, just talking against my. One is saying, like the people say the angel and the devil, and they're um, chatting in your ears. One is saying do that, and one is saying no, don't do that. You get the idea, right? That is, I have that constantly. Uh, in general, that's just how I am as a person. That's just part of my personality and everything. But in trading, it's um, uh, how do I say it? It's in my humble opinion essential if you want to be a good trader. Because if you don't do that, and by the way, oh, let me just show you it here. Oh, wait, here. Here. You can, I don't have no fucking idea how these buttons are called. But anyway, you just look at it. There's three buttons you press them together. It's gonna hide everything, okay? I use that all the time, and you also see me using that. Why? Because a chart with line that you had already, it's fuck, what's the word in English? It's bruv, what's the word? it's affecting your brain. It's affecting your thinking. It's, you know, like you're kind of like married to the idea. And if you clear that, it helps me to see the chart more clearly, like in a neutral state. So no line on my chart are saying are saying the price should go down, and no line on my chart are saying the price should go up. Okay, it's neutral. There's nothing there. So it's kind of allowing me to like um, seeing the chart at the neutral stage of mind. It kind of refreshing, and just to take a step back and thinking like, okay, is it really bearish, or am I kind of like talking myself into this idea? I will definitely suggest that. And why I said the price is not very good right now, because we had this institutional order flow entry drill that I just explained. But the issue right now is Tuesday's trading wasn't that strong. We did trade up a lot, but but we did not close above it. It will be very clear if we close above it. Then this will become an order block, right? And the issue is we did not close above it. And today's trading, at least for now, in the high of day, where is it? Where is the high of day? It's around 50% of this, bro. Let me just let me just close everything. It's too much. We are around. It's coming in at around 50% of the this busy. Now it's an invergent value gap. So then this invergent value gap, respecting the invergent value gap, then it's again speaking against us, right? If it's respecting this invergent value gap, that means the price should go down. You see, that's why I say the price is stuck in between, because you have like you can explain it either ways. You can say it will go up because we had the institutional order flow entry drill, clear the liquidity, and that's for the bullish idea, right? But for the bearish idea, you could say, yeah, we'll trade up into this order block. We had market structure shift here, and we're respecting the inverted fair value gap. You see, I can explain it either way. That's why the markets, it's not gonna be that good, and especially when higher time frames like this, you don't want to see happen at all. If this is happening, my opinion, I would suggest you don't even trade those type of markets, because it's gonna just go up and down with no clear um, move, and the next thing you know is that you just spend your whole day sitting at the chart, trying to short, get stop out, reverse, trying to long, stop out again, then reverse, blah, 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 and then you burn your whole account in like oh, in 1 a.m. session. Okay, that is something you don't want to see, no matter 1 minute or daily. And higher the time frame that is, uh, shitter the market is gonna be. If it's on the 1 minute time frame, okay, maybe the next, I don't know, next skills, next macro, whatever, next news is gonna take us out of that range. But if it's on a daily time frame, it's gonna take a while. Maybe today, or maybe tomorrow, or maybe next week, or maybe some news or whatever. But you don't really know when are we gonna left the range. So um, don't spend your not only equity but also mental capital in those type of situations. And you want to I get the idea why people try to trade this, simply because FOMO. So you don't want to miss the move. Basically, you want to position yourself before the trade started so you can make more money. But I get the idea, but it's a miss. It's wrong. Why? Because right now, as for right now, you are doing it because you want to, let's say you are buying right now, okay? Why you are buying right now? Because you are thinking if the price go up, I will have a very very cheap entry, so I'm gonna make more money. That's what you're thinking, but it don't make sense. Why? Because as for right now, you don't know if the price gonna go up or go down. Okay, and you see that the whole sentences start with the if, and if this if is wrong, everything after that is wrong. So right now you don't know anything. It's like a no man's zone. It's like I don't I hate to say this, but it's like when people say the buying a certain pressure is fighting each other, and then this is, let's say, the stage of fighting. So you can explain it either way. It's not very clear, um, but you don't need to worry that you're gonna miss the trade, because if it's a good trade, we'll have um, a retracement, because that's what we trade as. That's what we do as ICT trader. As smart money concept. I hate the word, the term smart money concept. Just people abuse it so much. Like if you talk to a guy and he say he's an ICT trader, you know directly he's trading ICT. Have fair value cap, order block, and he say market structure shift. Like let's pure blood traditional ICT trader. And if you talk to a guy, he said I trade SMC, and this guy is gonna be on some bullshit. He's not gonna call it market structure here. He's gonna call it charge. Like bro, that's the gayest thing I've ever heard. And he's gonna just like have all that weird stuff. Like you get the idea. Obviously, smart money concept is ICT, but the fact is just the people that are saying they're SMG trader but not ICT trader are most likely those type of guys. That's just simply the facts. And all the 90-minute circle, and I'm the Igma. I cracked the code. Um, Everything is time based. Fucking 369 is the key to the universe. Fucking talking like he's Nikola Tesla or something. Anyway, but don't worry that you're gonna miss out the trade, because right now it's not to trade. You don't know what direction it's gonna go. Right now, if you trade this, if you take entry, no matter buy or sell, you take here, it's gambling, because you don't know. And what you want to do is, after the price has told you what it's gonna do, let's say when I enter my model, yeah, I have my liquidity graph, and I can answer myself the three questions: where is it from, and where is it now, where is it gonna be, right? I can answer this question, and it's disrespecting anything that is against my position, and then our entry. But when I entry, it's on a retracement. As the trader, we always enter on a retracement. We don't enter as the price is going. We don't buy as the price is going higher. We buy as the price is going down. Like that's the biggest difference between ICT trader and normal traders. Okay, there was a breakout and whatever. We enter on retrace. So let the price do its thing. After the displacement or whatever, after it has told you what it's gonna be, then you just simply sit back, have a limit order set, and wait for it to retrace. And if it tags you in, it tags you in. And if not, if not. Simple as that. I mean, would you rather miss out the move and make no money, or rather um, be in there too early and get a stop loss? You can choose. If I put it this way, it's a very simple decision, right? Because making no money, you're at zero, and lose money is a negative. Zero is better than minus. We all know that. I think we talked enough for today. And the trade is still going on, and it's looking very bad, in fact, because not only we this proportion block are still holding the price, respecting it, and you can see how we have all this wick to the downside, but not upside. If it's bearish, if the bearish idea is right, we want to see it to the upside, but now it's to the downside, and it's all holding the price and blah blah blah. Um, yeah, so this trade is gonna probably get stopped out in, okay, it's about 14, in like 20 minutes maybe. Let's just uh, hang around until we get stopped out, okay? Yeah, let's just do that. It's gonna be a long video. Is there anything else to be talking about today? Have I got everything? I think I did. Did I? Oh, I know who said that. Who said that? I heard it in a podcast, and I can't remember from where. But this guy basically said, if you are doing the same thing over and over and over again, and but expecting a different outcome, that's insanity. Literally, the word insanity is what the guy said, and it kind of hit me. Obviously, I have learned from my mistakes, most of them, and I'm doing pretty good right now. But I wish I had heard that earlier, definitely. Because if I look back, I was doing that. I was doing the same thing over and over and over, but expecting a different result. I was not self reflecting on my mistakes. I was not learning from my mistakes. I was basically, like a brainless guy, just keep on repeating the mistake like a dickhead, but expecting it to have a good outcome. That is insanity. I was insane. Um, yes. You have knowledge but don't know how to use it. You open a chart, you are overwhelming. Yeah, you don't know how to start. I think I answered all the questions, right? You if you don't if you I'll probably gonna get stopped out here. The price is going higher. The whole day we basically just stuck in here. Um, but still, overall, I'm bullish. You can tell that we are in a buy program, right? We have this turtle soup here, and the equal low and all that I talked about earlier. And then from there on, price goes up, displacement, fair value gap, all the block holding the price trades up again. Have this proportion block left, comes down to the proportion block, holding the price again, and then trades up again, and then this black candle becomes a proportion block, and we trades down, and right now it's still holding the price, and from there we have this black candle, the proportion block. We trade above it, closed above it, and right as for right now, it's still holding the price, even though we have all this 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 wick and stuff. But if you look at the bar, it's still respecting it. It did not close below the 50% level of this. Let me draw it real quick. We did not close below the 50% level of this order box body. Now we're gonna probably get stopped out. And then after that I'm gonna close the video. Okay, why did we get stopped out? Why was this wrong? First of all, hourly time frame. As I just talked about, we are in a buy program, so every down candle, order block, proportion block are acting support. Okay, and where is our draw? The equal high here that we also said today this morning. Even for today, it's still having potential. We might still trade up there again, but as for right now, we have all this equal high buy side liquidity resting here, right? And why was this sell idea wrong? Why did we got stopped out? Because this re this this was now we got stopped out. It's not a retracement, it's a reverse. Why was it a reverse? Because even though we took out all this liquidity here, yeah, equal low, 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 relative equal low, right? We are still respecting this PC. And where did the body start? Inside it. We did, and the wick just traded to the 50% level, and wick through it a little bit, but that's no issue. And also, if we look to the 5 minute, what do we have here? We have this order block holding the price. 1, 2, 3. 3 times, and it's still holding the price. Yeah. And it did not break through. Ideally, if I wanted to short, I would like to see this get disrespected. So we traded below that and close below that, and then retrace here or stuff like that. Then I will maybe consider to enter a shot, but you know, I'm definitely I want to take that trade. And it's also the wicks that I talk about here. You see the wicks to the downside, so we are going down and then up real quick, down and up real quick. That is something we don't want to see. We want to see it have wick to the upside, you know. Yes, let me just call it here. Otherwise, it's gonna be way too long. I have no idea how long this video is. The whole lunch session we was here, right? Yes, that's it for today. Hope you learned a thing or two. And have a nice week. Good luck and good trading, guys.